I can see how different players, different personalities, different motivations 15 or 20 years later might lead to some of the mistakes that were made in the past and not learning from that.
The executive order has 6 broad categories of rules and regulations and policies that the administration wants changed. We could be stuck with some of the programs that are implemented as part of this executive order, or whomever it is that becomes president could overturn.
You need a committee monitoring all the executive order drops because they're monthly at least. Episode 82 of Market Moves with Mark and Jeff. 2 uninteresting guys talking about interesting times coming from a somewhat interesting location here, Jeff.
Yes, we are. For maybe the first time in memory, Mark, we're actually sitting next to each other, and you can tell that. We've recorded multiple where we've kind of shifted things together to have different computers, even though we're looking at each other, you couldn't tell. But yeah, I got an invite to come and speak at the ResNet conference, which is addressing, green building, energy efficiency, building. We are doing a presentation later this afternoon, kind of addressing how the valuation component touches this green building initiative generally. And fortunately, the invite was by somebody who is both interesting and smarter than us, and even a recent podcast guest in Sandy Adamatis. So looking forward to that. I think will be a good time.
Yeah, you bet. I was just hearing of a recent important law change or law enactment in Washington, the state of Washington, saying that every new listing needs a HERS rating. HERS rating is the energy efficiency assessment of a home that appraisers hopefully one day can easily access and use to kind of include energy efficiency in a home and compare relative comparability to other sales. Well, for the topic for our show today, I am from the government and I am here to help. On Friday afternoon, we got 2 what I think are surprising executive orders, and Jeff and I have no level of expertise to be discussing those. So we referred to friend of the pod, Scott DiBiasio from the Appraisal Institute, who covers government affairs and has for multiple decades at this point. Scott, welcome to the show. I hope you are here to enlighten us.
Yeah, absolutely. Thanks, Mark. Thanks, Jeff. I appreciate you having me. It's always an honor and a privilege to be part of your show. And happy to dive into the 2 executive orders, one that's particularly relevant to the appraisal industry. And we'll talk about some of the things that does and how we think it's going to be implemented.
Well, looking forward to it for sure, Scott. And, as we were doing, I was doing some research. I kind of came to discover, like you had said, there were a couple of executive orders that came out on this topic. One was around addressing affordability in construction of housing, which doesn't really touch the appraisal space, but is definitely in the space of real estate, and the administration trying to address this affordability challenge that everybody in the world is acknowledging and wanting to find a solution to. Though that's not the main focus of the discussion today, is there anything from that EO that stands out to you or worth commenting on, do you think?
It's kind of interesting because we're hearing that the FHFA, the Federal Housing Finance Agency, was the lead agency in drafting this executive order. Of course, the director of that agency is Bill Pulte from one of the largest home building families in the country. So I wasn't surprised to see an executive order addressing ways to encourage more new construction as a way to try to address the housing affordability crisis. But it's the second executive order on promoting access to mortgage credit that I think is of more interest to appraisers.
Yeah, exactly. I was just scanning through that and realizing that there were multiple that came out, and you had commented that the administration basically dropped these kind of end of the day on a Friday to give everybody heartburn and indigestion over the weekend of trying to figure out what the heck it means and what are we going to do about it, or what is to be done. But it was that mortgage credit, and there were multiple points. I think 8, if I remember right, or at least sections in that EO. One specifically addressing appraisal modernization that will be the primary focus, I think, of what we're talking about or discussing here. But love to get into that. Anything in those sections other than section 6 that stand out to you as touching appraisal and valuation, or is it primarily focused on that?
It's primarily going to be Section 6, which is titled Appraisal Modernization. But there are things in the other sections that tangentially touch on appraisal as well, like TILA, RESPA issues, HMDA issues, ability to repay and qualified mortgages. But it's primarily going to be that Section 6 that we're going to be focused on and looking to see how the administration implements the president's directives.
Scott, before we get into the meat of the executive orders, just the timing in general, did this surprise you? Were you expecting these? What did you see coming?
Yeah, we got sort of bits and pieces of information earlier in the week. I was at the CRN conference down in Dallas last week, and there were some pretty high-ranking folks there, some very credible sources who clued us into a couple of different, plans that were being put together, particularly as it relates to TILA and RESPA, as well as the interagency appraisal and evaluation guidelines. And we can get into each of those in a little bit more detail later on. But we did not expect a full-blown executive order. We thought that those were going to be dealt with by the respective agencies, internally. But we were not expecting this, and it dropped at literally like 4:50 in the afternoon on a Friday, and it came as somewhat of a shock to us.
I was talking to a appraiser friend of mine that's been at this a lot longer and a lot wiser than I, that has just sort of off the cuff had given Trump about a grade of a D for appraisers, helping appraisers since taking office so far. That sort of resonates with me. It feels like some help is coming at some point with maybe it's all this discussion of lower rate talks, new Fed chair, et cetera. But boy, we aren't feeling much of it. And every international initiative seems to derail any momentum we're getting. When I read this appraisal modernization component, it sure doesn't. This isn't helping appraisers, and I don't think that's the goal. It's helping homeowners, or at least that's in the spirit of that. Yeah, interesting stuff.
Yeah, absolutely. And in the purpose statement to the executive order, Trump talks about how various laws and regulations, in particular those that were enacted as part of the Dodd-Frank Act and regulations promulgated there too, have unnecessarily restricted access to mortgage credit, and that those laws and regulations primarily impact community banks the hardest. And, it has resulted in a concentration of mortgage lending in some of the largest banks and even with non-bank lenders. So a lot of community banks have exited the residential mortgage lending space because of the rules and regulations. And we're talking about banks with less than $100 billion in assets. And some of these regulations that he cites, including some of the appraisal regulations, he says have restrictions on access to credit. I tend to disagree with him, particularly on the appraisal modernization stuff. A lot of the things, rules that he wants to be addressed were put in place following the crisis of 2008. And now he wants to roll that back. And how long is it going to be before we get into another situation, like 2008, if some of these things that he wants addressed actually come to fruition?
It's interesting. You know that history can repeat itself. We can make the same mistakes that have been made in the past. And just hearing you outline that, Scott, I can see how different players, different personalities, different motivations 15 or 20 years later might lead to some of the mistakes that were made in the past, and not learning from that, in part because it's not the same people that learned a lot of those painful lessons, at least necessarily, deciding their motivations to try to improve things, some of them, politically driven for sure. But I share, I think, some of the concern that, weakening the credit decision-making process simply for the sake of giving more money to more people with lower qualifications doesn't in the long term lead to great outcomes, even if in the short term it does have the, in part, the desired effect. One of the conversations we've had recently is around extending a lot of credit simply for the purpose of asset purchases. And when you've got more dollars chasing a fixed number of assets, that has the impact of driving up the asset value or pricing, which we're already having an affordability issue with housing. But just some observations, I guess, as far as where, some of these policies, what some of the unintended consequences could turn out to be.
Yeah, absolutely. I couldn't agree with you more. And, it's going to particularly impact low and moderate income home buyers who he is targeting specifically. And, we're going to could see similar situations from 2007-08 where people got underwater pretty quickly and ended up losing their homes because the values decreased. Interest rates are going up again right now, at least temporarily because of the war in Iran. But yeah, fortunately we haven't seen, and you guys probably know better than I, but there's not as many adjustable rate mortgages out there right now. So I think that may help to alleviate some of the potential crisis because that was where a lot of people got themselves into trouble in 07 and 08.
Scott, maybe just a couple of specifics, if you have any top of mind, of policy that was driving consolidation of mortgage lending to the top players, making it more expensive. We've seen the Rocket, the United Wholesale Mortgage, Chase, the real big guys clearly has all moved up the chain there. So what are some examples, if you got them, of what might change here and push or get community banks back in the game?
Sure. So the executive order has 6 broad categories of rules and regulations and policies that the administration wants changed, specifically in relation to appraisal. He wants to modernize appraisal regulations and expand the use of AVMs, as well as desktop and hybrid appraisals. And I would add appraisal waivers to that as well. And then he wants to utilize more artificial intelligence in the valuation process. He's concerned about the appraiser qualifications, and I think you're going to see some pretty significant changes. And then lastly, he wants the federal bank regulatory agencies to reduce appraisal requirements for low-risk transactions, including low loan-to-value refinances, small balance loans, so on and so forth. And they asked HUD and the VA to align their appraisal standards and to clarify the distinction in appraisal and inspection. I don't fully understand the last 2 there, but we'll just have to see. I'm not sure that they're going to directly affect appraisers, and I'm not exactly sure why they were put into that section of the executive order. But yeah, there were a lot of policies that were put in place that were applicable to federally regulated banks that didn't necessarily affect non-bank lenders. So they were able to operate outside of federal regulation, at least to one degree or another. And that, I think, is what resulted in them having such a significant market share.
So Scott, do you, yeah, go ahead. I'm sorry.
No, I was going to say, and if some of these regulations are rolled back even more, I think you're going to see, even more consolidation. Although this is directly pointing to federally regulated banks, I think it may have an unintended consequence of actually further consolidating mortgage lending in, let's say, the top 4 or 5 non-bank lenders.
To level the playing field, one option could have been to add the increased bank regulation to the non-bank, but that is not what you see happening. What you see happening is the removal of those increased regulations to the banks so that there's a level playing field of blanket regulation across the board.
Yeah, that's correct. And, whether or not the banks come back into the markets as a result of the loosening of some of those regulations. And keep in mind, like with TILA RESPA, one of the things that we're hearing is a directive for the bank regulatory agencies not to enforce TILA and RESPA. And of course, all of the appraiser independence requirements are in TILA. But keep in mind that the banks are still required to comply with the law. It's just that there won't be any repercussions if they don't. And most prudent lenders will continue to abide by TILA and the appraiser independence requirements, but there could be institutions that start to cut corners, and we could see a return to the pressure situations that got us into a lot of trouble in 2007, 2008. If banks and other entities. Of course, TILA is broadly applicable, not just to federally regulated banks, but to non-banks as well. There may be some banks and some lenders that start to twist arms to push value again, and that's a big concern that we have with with this, and that's one of the things that we've heard is potentially coming down the pike.
It's interesting. As you're describing that, Scott, I think about driving down the freeway, and where I live, the speed limit's 80 miles an hour. Everybody drives faster than whatever the speed limit is. And to the extent that you don't enforce the rules on the books, people will naturally, push as far as they think they can get away with and still not, have an enforcement issue, take place. And so I can see exactly what you're talking about, that playing out. One of my frustrations, even in the 07-08 crash and then the resulting regulation that came after that, was that a lot of the stuff they were trying to address was already on the books or was already a problem. I mean, appraisers shouldn't have been succumbing to pressure. And the reality is it was a very, very small portion of those that actually were. And yet you get this whole, swath of additional regulation because we have to do something about it. And the something about it isn't just enforce what's already there. It's add a whole new layer so that we can take, essentially the political credit for having addressed, this big problem. We did something, problem solved, on to the next thing. But I hear what you're describing is at least one possible outcome, setting up for lax enforcement, poor decisions that are made once financial losses start to take place. That's where it just the process tends to repeat itself again. And I hope we don't go down that path, but it certainly seems like a plausible, outcome.
Yeah, after 2007 and 2008, obviously the pendulum swung, hard in one direction towards increased regulation on appraisers, increased regulation on lenders, and now the pendulum is swinging back, potentially to the other side. And like I said, the executive order is very sparse on specificity. It's all going to be in how the agencies implement what the president has directed, and I think he's given them a lot of leeway to roll back pretty much anything and everything that they feel is burdensome on appraisers, burdensome on lenders. More so on lenders than on appraisers, but anything that results in restrictions on access to credit is going to come under scrutiny.
It's an interesting point that you make too. Who is this executive order directed to specifically, as far as the agencies?
Yeah, all of the bank regulatory agencies. So OCC, Federal Reserve Board, NCUA, and HUD and VA as well, FDIC, and there's two different sections. There's some things that are directed at the federal bank regulatory agencies, and then there's a couple of things that are directed at HUD and VA. And it's kind of interesting. One of the things that we're hearing through the grapevine is that potentially the VA, the Veteran Home Loan Benefit Program, under the guise of aligning VA and FHA appraisal requirements, there's some talk that VA that program within VA can move over to FHA entirely. And part of that reason is to get rid of the the VA appraiser panel and go more towards the FHA appraisal hiring process. I think that's a stretch, but it is something that is being discussed specifically in relation to that provision that says that, VA and HUD should align appraisal standards between the two agencies where risk is comparable. So that I think gives them the authority to do that. I'm not exactly sure how that will work. That they're obviously very different programs, but that's one thing that we're potentially hearing, or that we are hearing.
Well, it feels like these executive orders are the very first domino of a whole series of chain reactions that we can't know a lot about. This you referenced with regards to like the initiatives that might put the community banks back in play, for instance, is very vague at this point in how it will be implemented. But boy, when I'm reading the appraisal modernization piece, that certainly rings true. What it does feel like to me is a real attaboy to the GSEs. You've been doing great. All your appraisal waivers, all your property condition reports, use of AVMs, et cetera, keep going, and maybe a license to do more. Is that how you're reading it?
Absolutely. And that's one of the things that I was going to mention is that, during the pandemic, we went up as high as about 60% on appraisal waivers. And then they implemented the property data collection And I think there is going to be a directive from FHFA to the GSEs to bump up their appraisal waiver numbers in favor of their AVM. And we could very quickly get up to as high as 40–50% appraisal waivers. And obviously, that's a significant amount of lost business for appraisers.
I was just talking with a mortgage loan officer friend yesterday, I think it was, talking on this topic. I ended up doing an appraisal that initially qualified for a waiver, but because the contract had an addendum where there were repairs requested, it kicked it out of qualifying for the waiver. They wanted the appraiser to go look at it. And so getting his perspective on what they're seeing boots on the ground, he said, it's interesting. Sometimes for high LTV loans, they're qualifying for the waiver. Sometimes for very, very low LTV loans, a $100,000 loan on a $1.2 million property was an example he cited. They didn't get the waiver. Like, they still wanted the full appraisal done. And so it certainly seems that there's, to this point, some inconsistency in the way that program is being administered, or what qualifies and what doesn't. I know it's more than just LTV that goes into it, obviously, but it would be interesting to see what that impact is. His read to this point was that it was no more than 10 or 15% of the total loans originated. He's personally seeing waivers offered on, which is down from what the peak was at the 40% or whatever. But there's certainly a pathway to seeing that become more of a default, or broadening the parameters to where it just more naturally qualify for that. And it'd be interesting to see if that turns out to be good policy in the long run. I mean, we certainly it's an open debate, I think, at this point.
Yeah, we monitor the data from the American Enterprise Institute pretty closely. Comes out monthly, and they detail the number of appraisal waivers, the number of property data collections, and the number of appraisals that are ordered in conjunction with loans that are qualified for sale to the GSEs. And right now, the waiver number is about 22% or so, and the property data collections are really, really low. And the hybrid appraisals are even a smaller percentage. They will only order a hybrid appraisal if a property data collection has already been done, and then something in the transaction changes, like the borrower decides that they want to take cash out, and now, of course, they wouldn't qualify for an appraisal waiver in most instances, so they have to kick that up to a hybrid appraisal. But the numbers of appraisal waivers have been going up incrementally over the last couple of months. And again, like we saw during the pandemic, they can ramp that number up pretty quickly if they want to.
Well, if we could, maybe I can start with the first two bullet points that I'm looking at here with the appraisal modernization. This is the modernizing appraisal regulations guidance to extend the use of alternate valuation models and artificial intelligence valuation tools. What comes to mind when you hear artificial intelligence valuation tools?
Yeah, I think there is going to be a push to relax some of the AVM quality control standards, and to direct the GSEs and some of the lenders, the bank regulators, to encourage institutions to utilize more AVMs in lieu of traditional appraisals. And there's going to be, I think, more liberal use of artificial intelligence as well. And, we may get to a point where type in a property address and I evaluate, the value of that property is spit out. I think we're a long way from that. But that certainly is something I think the administration would like to, that direction they'd like to go.
Okay. Well, the second one, this one is interesting. I'm not really sure what this has to do with addressing home ownership, but simplifying appraiser qualification requirements. I have heard within the Appraisal Foundation discussions of questioning the need for experience in all to get a license. There certainly has been a question regarding college degree requirements. Do you have any instincts towards what this means? Does it feel like appropriately? Is it an appropriate bullet point here? It feels a little out of left field to me.
Yeah, it's something that FHFA has long had an interest in. And I think this is just sort of a convenient place to put it. And this is pure speculation on my part at this point, but it is something that is being talked about in industry circles But I think you could see, a directive indirectly from the White House to FHFA and from the FHFA to the AQB for the AQB to get rid of the experience requirement entirely. Of course, FIREA never intended, never contemplated there being an experience requirement at all. That was something that was unilaterally put in place by the AQB. And I'm not exactly sure what year it was. But FIREA talks only about an exam. They don't even talk. FIREA doesn't even talk about education. And in fact, Congress at the time, there was a implementation hearing, and they were shocked to hear that there had been an experience requirement put in place. And they stated in a report that it was specifically their intent for there not to be an experience requirement. I think the AQB is going to come under some pretty intense pressure to eliminate that requirement, or at least to roll it back to the bare minimum. Now, of course, the AQB is an independent entity. They don't have to respond to the White House, but I think there would be some pretty significant repercussions if they didn't.
Well, if we weren't recording this right now, the AQB actually has a public meeting that's taking place, I think literally as we speak, but it's definitely been a topic of conversation. And then the challenge, that the Appraisal Foundation has is the mandate is to promote and protect the public's trust in the appraisal profession, and putting unqualified people out there as credentialed, practitioners does not do that. But there's a healthy and definitely robust debate around what is it that actually qualifies you to be a trustworthy practitioner that isn't going to make mistakes that diminishes the public trust, and whether that's public as far as homeowners, public as far as GSEs and those using and relying on appraisal services. There are a lot of stakeholders involved, and everybody's got an opinion as to what should or should not be required to do a good job. At the end of the day, appraisers have to produce credible and believable appraisal reports, or the value that they have in the market just goes away in time. And so I think there's a tightrope to walk of not having unnecessary or ineffective barriers or like hoops to jump through, but not cheapening the process or diminishing it so that you have practitioners that really don't know what they're doing and aren't producing reports that people believe in.
Yeah, I think if you were to poll appraisers on both the college level education and the college degree requirement for CG, Certified General, as well as on the experience requirement, my guess is that the profession would be split pretty much evenly, 50-50 on both of those issues in terms of ensuring an adequate supply of appraisers, because we could get into a situation where we're back in a shortage situation again. All it takes is probably a 1 point decrease in interest rates, and we get into a refinance boom. And now there's a shortage of appraisers. And trust me, lenders are going to get the valuations that they need, if they need them at all. They're going to find a way to get them through AVMs, through artificial intelligence, through waivers and greater use of property data collections. And appraisers may be, unfortunately, cut out of a lot of that work.
I think it's Elon that I've heard say that it is better to be optimistic and wrong. It's a better way to live to be optimistic and wrong than pessimistic and right. The last couple of decades, appraisers have been pretty pessimistic with regards to the outlook in mortgage appraisal, and I think the Appraisal Institute has been too. Right? During my time on the board, I was kind of there to talk about that. And as we were meeting the first time on this podcast, we were comparing the Democratic nominee versus the Republican nominee. And I came away from that and maybe with confirmation of what I was already feeling, that, boy, PAVE and some of the other things that might keep going, we are in a better shape if a Republican takes appraisers in general, mortgage appraisers, in better shape if a Republican were to take the presidential seat. But when I look at these first two bullet points, Scott, what I think maybe a mistake that I didn't wait enough was that I was connecting logical dots, that if homeownership is the number one issue, that we should get more transactions should be good for appraisers, right? And here in the first instance of the vague edict from this executive order is, use less appraisals, right? Find alternatives. And the second is make it easier to become an appraiser. Those two things, boy, this does not feel like a friend of the appraiser at all in the White House right now. And we're left to know that just like PAVE, this was a deep, impactful initiative while the president held power. But as soon as the president did not hold power, it was no longer part of our world. How does anybody deal with this uncertainty?
Yeah, it's as I mentioned a little bit earlier, depending on how the election turns out in 2028, we could be stuck with some of the programs that are implemented as part of this executive order, or whomever it is that becomes president could overturn. Keep in mind that executive orders are only valid for the term of the president, and then they become invalidated. However, the damage could have, will have already been done through the implementation of this executive order, but the executive order itself will sunset, and then whoever is president will just have to decide whether he or she wants to go through and systematically overturn what is done within the agencies. But yeah, I thought the atmosphere was going to be a little bit better, but Trump has had his own experiences with appraisers, and I'm not saying that that's what is driving this executive order, because I don't think it is. But yeah, he's had his own experiences with appraisers, and right now he's not doing us any favors.
Boy, there's no doubt. When this came out, Scott, this executive order, nobody's surprised to learn that on social media there was, a very big uproar and response, to it. And I always chuckle a little bit. I saw a lot of messaging around, well, where's the Appraisal Institute, and why isn't everybody like keeping these bad things from happening to our profession? And it's like, this thing just came out like an hour ago, and then they're wondering why, the Appraisal Institute hasn't, solved all their problems. And it's always particularly ironic when that's coming from people that aren't members of the Appraisal Institute. But I do know that there is a concerted, and intentional response to at least trying to understand and give feedback where possible, not only from the Institute, but members of the foundation I know are, trying to engage with these agencies to find something that makes sense. But would love your perspective on, what the Institute's doing specifically in terms of responding or providing feedback to those that are stakeholders in the process.
Yeah, absolutely, Jeff. And I will say that this one was kept pretty quiet. We meet regularly with FHFA, and if we're correct in our speculation that agency is where most of this executive order originated, they kept it under wraps pretty well. I mentioned the TILA RESPA non-enforcement, but we're also hearing that the interagency appraisal and evaluation guidelines will be subject to significant revision, if not rescission entirely. And, that's what guides lenders on how to order, how to use appraisals and to do appraisal reviews and such. And if they don't have that guidance, it's going to, I don't want to use an overused term, but it's going to become the wild, wild west again, because they're not going to have any guidance. There's going to be no enforcement. And it's but like I said, this one was kept pretty quiet. The only thing we learned about was the guidelines, as well as TILA and RESPA. And of course, even the previous administration was talking about the experience requirement too, and that was part of the PAVE task force recommendations. And actually, while I'm thinking about it, one thing that I believe is almost certain to happen is a directive to the AQB to eliminate the requirement for qualifying and continuing education on valuation bias and fair housing laws and regulations. And that could come actually pretty soon. I understand that the Appraisal Foundation is having a special Board of Trustees meeting next week. And I'm guessing to discuss the executive order specifically. And I'm guessing that all of these topics will come up for discussion. But I think that's one thing that is almost certain to be eliminated. And, we've been suggesting, or at least I personally have been suggesting to Jerry Urich, the chair of the AQB, that maybe they want to take another look at this, because I think, having to take that class every 2 years, yeah, it's only 4 hours, but having to take it every 2 years, I think was a little bit of an overreach on the part of the AQB. I think it probably would be better and more appropriate for appraisers to have to take that class maybe every 5 or 10 years. The law in that area doesn't change that frequently. And, appraisers may need a refresher periodically on valuation bias and unconscious bias and things like that. But I think, having that course once every 5 years, and that is, I think, going to occur at a minimum. But I'm also more of the opinion that there will be a strong suggestion made to the AQB to get rid of that requirement entirely. And what's going to be really interesting is, even with the, let's say the experience requirement is eliminated, let's say the requirement for the valuation bias of fair housing course is eliminated from the criteria, there will be states that will not get rid of the experience requirement. And there will be states that don't get rid of the valuation bias and fair housing requirement. And it's going to be really interesting to see, especially on the experience side, because what you'll see is people gaming the reciprocity system. And they'll go to states that don't have the experience requirement, get a license, and then it'll be up to the state that they're trying to get licensed in whether to grant them a reciprocal license. So, you're going to have this really weird kind of situation. And, on the valuation bias and fair housing course, same thing. States aren't going to roll that back. There will be some. And that's an entirely different topic that we could talk about sometime as to what's going on in Florida in relation to that course. But it's some states will respond and others won't.
Scott, I've got two questions relating to Fannie Mae and Freddie Mac. They'll be my last questions of the interview. Thank you for being so gracious with your time today.
Absolutely.
So while these are spearhead like directives that might take a long time to implement, in that it is kind of a pat on the back to things that are ongoing with Fannie and Freddie, hybrids, property data collections, waivers, et cetera. Is it right to think that these might reach implementation quite a bit faster? Is that how you think about it?
Yeah, absolutely. I think, FHA could direct the GSEs to almost immediately increase the number of waivers that they offer, increase the use of AVMs, evaluations potentially. So that's something that could happen pretty quick. And like I've said before, look at the slope of the line during the pandemic. In February of 2020, the number of waivers was very low, but by the end of March, it was like 40-50%. So they can do that pretty quickly. Now, the problem that they're going to have is that they still need to have an inflow of appraisal data to be able to populate their AVM and make sure that the AVM is reliable. And if they don't have that data, then they're going to get into situations where that information, the output may not be reliable. So from what I've been told, they probably can't go more than about 40% in terms of waivers. There was an exception, obviously, during the pandemic, just for obvious reasons. But, they could go pretty quickly to 40%, 45%, I think.
All right. My last question would be, it feels like the conversation in the direction that has gotten more distracted by the day, but the exiting of conservatorship with these two entities, I'm not sure these executive orders are really interfering with that one way or another, but it does feel like even the $200 billion of mortgage-backed security purchase suggestions, I don't think that was the direction the balance sheet needed to go to prepare for conservatorship exit. What are your feelings on that right now, if you have any?
Well, obviously, I think this is going to inject a significantly more amount of risk into the system. And I would have thought that they were actually going to be, FHFA would direct the GSEs to be more risk averse as a result of coming out of conservative, or as a condition of coming out of conservatorship. But that doesn't appear to be the case. And, it's interesting that you bring that up, because I haven't heard any discussion about that in the last several months. So maybe this is taking precedence. I don't know. And maybe conversations are continuing to go on behind closed doors, but I haven't heard anything in relation to that in a while.
It's definitely not being talked about. And, Scott, I wonder if the administration is looking at this and saying, hey, having the GSEs, Fannie and Freddie, having more control over them in order to shape housing policy, in order to try to address affordability in the ways that they're wanting, I can see them saying we're better off being able to direct them and oversee them directly as opposed to exiting them from as much oversight as we have. We talked with Ed Pinto early on in the podcast, and I think it was him, if I'm remembering right, who had suggested that two GSEs or two massive purchasers of mortgage-backed securities, or at least those that buy up the mortgages and package them and sell them, is somewhat risky. And having 5 or 6, out there in the market that were, roughly comparable in size would really de-risk the situation. Where if you have one that runs into financial problem, you've got enough others in the market that it's not catastrophic to the system, which is why they're in conservatorship in the first place. So just interesting. I'm not hearing anything about that either. And I'm only left to speculate as to if the administration might be deciding it's to their advantage to not give them away just yet.
Yeah, you're right. You're absolutely right, Jeff, on both accounts. FHFA was put in place as the regulator of the GSEs when they were put into conservatorship. And now they have a significant amount of leverage over the GSEs. And, I think the administration is going to continue to use that to put in place new additional, new policies that increase access. And, on the issue of mortgage-backed securities, it's going to be really interesting if they, get rid of appraisals, go more towards evaluations and AVMs. It's going to be really interesting to see how the secondary markets react. I think there could be a risk premium there. And also the ratings agencies. I think you may see some downgrading of the ratings on on some of these mortgage-backed securities. So, I don't think I don't think investors are going to be real happy about this, just because they may see it as going down that path again. But it's going to be interesting to see how it all plays out.
Jeff, do you have any further questions for Scott?
No, just a big thank you, Scott. It's always enjoyable to get together and talk through and get your perspective, knowing how in the weeds you are with these things as they come out. I suspect that this executive order may have altered your plans for the weekend when it dropped initially from what maybe you were thinking that you'd be doing. But just a big thank you for being willing to come on and talk here and for being as involved as you are in all of these discussions that have taken place at the federal and at the state level. You made a really good point that just because the AQB rolls back a requirement doesn't mean that the states will automatically do it. The governance system that we have is pretty unique, and there are a lot of moving parts, but it's really, really valuable to have somebody as involved as you are. So we really appreciate that.
Yeah, absolutely. Definitely happy to be part of it. And just in time for the AQB meeting here at 1:00 Eastern time. So once we finish, we'll hopefully get some more insight as to what direction the AQB is going. Of course, their comment period closed on March 3rd. And from what we're hearing, they're probably not going to make any decisions today. There's at least one more exposure draft coming, and that the contents of that exposure draft may change based upon this executive order. And yeah, you're absolutely right. This kind of ruined my weekend. I was on travel and was in Sacramento for a little while, and then went to Atlanta. But we got a statement out pretty quickly, and we're also working on putting together a stakeholder group, sort of an executive order stakeholder working group, so that we're ready to be able to respond to some of these proposals as they come out, and we can do so in a consistent manner amongst all of the professional appraiser organizations, amongst all the stakeholders. And I'm going to be down at the IAC down in Miami next week, and that's going to be an interesting conversation, because the IAC was one of the entities that did call for the complete elimination of the appraisal experience requirement. The Appraisal Institute did not go to that extent, but IAC did, and actually some folks weren't happy with us for not supporting that. But it's going to be an interesting conversation, especially based upon what happened on Friday afternoon. But I do appreciate the invitation. It's always great to be with you all, and all I can say is stay tuned. It's going to be a wild ride.
Is the thumbnail, Scott, for this podcast? I was just thinking as we were talking here, Trump in sort of an Oprah stage with a "you get an executive order, you get an executive order, you get an executive order" thing. You need a committee monitoring all the executive order drops, because they're monthly at least.
Yeah, and it's you bring up a great point, which is a lot of his executive orders have been the subject of litigation, and I haven't heard of any litigation in relation to this one yet. But that doesn't necessarily mean that some of the fair housing and consumer groups may not, they may be looking at the potential for litigation to stop some of this stuff that's intended to try to help consumers, but ultimately I think could harm them.
Yeah.
Well, Scott, as a member of the Appraisal Institute, thank you for your service to the Institute. I think you do a great job as it relates to government relations for the Institute. So thank you for doing that. I appreciate everything.
Yeah, absolutely. Once again, I appreciate the invitation, and we'll be in touch.
Talk to you soon.
All right. Take care, guys.